Hi, welcome to this episode of Talking Tax with Alex. This is the part 3 of our series in which we're going to analyze closely held insurance companies and the court case related to that. So, in this episode, we're going to quickly talk about what this series is about, what videos are contained in the series. We're going to quickly revisit the basics of the case. In this episode, we're going to talk about the taxpayer and how did this case come about, and ultimately end on my closing thoughts. So really quick again, the introduction, we're analyzing a court case for Reserve Mechanical Corp v. Commissioner. There's two cases listed here because this case actually went to appeals. So in this series, part 1, we discussed what a closely held insurance company is, basic terminology, and what the IRS's position is on this, and I'll link that part 1 on this video. Part 2, we discussed the insurance background and facts and circumstances related to insurance coverage for the taxpayer, and as part of our beginning of the court case analysis. And into part 3, we're going to continue our court case analysis where we talk about the taxpayer facts and background. And if I'm being honest, I probably should have done part 3 as part 2. We should have talked about the taxpayer first. But this is just a minor order of operations, talking about the insurance facts of the case, and then talking about the taxpayer background. We need all of the facts and circumstances anyways. I think, though, in redoing this, if I had to do it again, I'd definitely put the taxpayer facts and circumstances as part 2. I don't know what I was thinking when I first drew this out, but it made sense at the time to put insurance. Anyways, and then part 4, we'll finalize the court case analysis and review the court's ruling. And I think that's going to be the most important video of this series, and it should tie everything together so that we can really see what happened and how this ultimately concluded. Again, just as a spoiler, the IRS does win this case, but I think it's really important to analyze why and how they won this case, because that's where I think the most value in understanding where the risks and the opportunities to running a captive insurance or closely held insurance company structure is. So quick review, just the tax years at issue here in this case is 2008 through 2010. The tax deficiencies are about $150,000, $160,000 a year for each of these years. And again, the taxpayers, how they had structured this, there's the owners. They own Peak Mechanical and Components, Inc. They created their insurance company called Reserve Mechanical Corp, which is reinsured by Pool Re. If you want to revisit on a refresher on all of this, please look at part 2. We do talk about Reserve Mechanical Corp and the reinsured issue with Pool Re. So Peak Mechanical Corp is paying insurance premiums to Reserve Mechanical Corp, which are both owned by taxpayers Zumbaum and Weichel, and they're purportedly getting insurance coverage. So their company Peak is getting insurance coverage from Reserve Mechanical Corp. And just an asterisk, closely held insurance companies or captive insurance companies are supposed to be for the purpose of writing coverages that are generally unavailable or impractical to obtain in the conventional insurance marketplace. Asterisk here, I just want to draw attention to the whole point of why you would set up a captive insurance company and do this whole setup. So let's start talking about the taxpayer. So what did Peak do? Peak was a business operation that was pretty small, only had employees of about 13 to 17 in the years at issue, so it wasn't a big employer. And what did they do? They just manufactured and sold underground mining equipment. So, and they also operated in Idaho, if that matters at all. And another part of their business was they repaired and cleaned equipment with hazardous waste. And so they also took care of that hazardous waste. They had procedures in place to make sure that they disposed of it correctly. And so, you'd think maybe they would need insurance against that. I don't know, but that was part of what their business was. So if you think about, their commercially available insurance, again, we went over that in part 2. That was covering normal business operations here. So when they formed Reserve Mechanical Corp. So remember, Reserve Mechanical Corp is the closely held insurance company. Doing so, they engaged Capstone on or around August 2008. And so Capstone is the company that basically helped them form the captive insurance company. It's the company that they got referred to do this, to set up this whole structure. Capstone did an on-site visit in August 2008, and so these dates are important, and we'll cover that in a second on the next slide. But just remember kind of the dates, because remember the dates at issue are for tax years 2008, 2009, 2010. So Capstone performed an on-site visit and looked at Peak's business operations to figure out what kind of insurance coverage they'd need. So Reserve Mechanical Corp was formed and domiciled in Anguilla in December 2008. So they created the insurance company, they domiciled it, and they did all the legal paperwork, filed everything by December 2008, and that's how they set up the structure. I put this quote in here because I thought it was very interesting from the case, but notably, the later issued feasibility study described one of the discounted coverages, employment practices liability, as a major liability concern. So this is, if we remember back in part 2, we were talking about some of the insurance coverage that they were given. Well, one of the Capstone did a feasibility study for Reserve Mechanical Corp, and they told them that they need to get employment practices liability because it's a major liability concern. If we're going to dive into Capstone, so taxpayers' relationship with Capstone, and the quote in the previous slide was just a little bit of a preview, getting into how Peak and Reserve interacted with Capstone, their captive insurance company management company. It's quite a mouthful, right? Captive and Capstone. So Capstone Services, what this company did. So this was referred to the taxpayers, and they basically did all the captive insurance related management and administrative services. This means filing, pricing insurance, getting the reinsurance established, compliance, filing tax returns. I said filing like legal filings, such as setting up the insurance company. In this case, they set it up in Anguilla. And they provided a turnkey program for small captives. So basically, one of their selling points was, captive insurance companies, they can be a lot to administer because you need to follow all the rules and do everything correctly. So they provided a service that allowed small businesses such as Peak, which is only 13 to 17 employees, to participate in a captive insurance arrangement. One of their services too was a feasibility study, and that's where the previous quote was a preview into the feasibility study, or maybe the lack thereof, or not lack thereof, but the weakness of that feasibility study, insofar as this feasibility study recommended a type of insurance coverage that was a major liability concern that was later dropped a month later. This Capstone, they advised clients for the premium price. So they told Reserve Mechanical Corp how much they should charge, as an insurance company, how much they should charge for premiums to insure certain types of things. And for this service, they charge about $15,000 per quarter. So, about $60,000 a year. Looking back and kind of in reviewing the case and how the courts found Capstone's administration of this captive insurance company, I listed the shortcomings because this plays into what the relationship was really like. So remember the dates that we were talking about in the previous slide, that they did engage the Capstone in August 2008, and then they did an on-site visit in 2008. Well, Capstone didn't actually issue the feasibility study until August 2009. So again, this is important because we think about the dates at issue, and if we think about when Mechanical Corp Reserve was formed, it was formed in December 2008, and then it issued insurance policies as of 2008. So we think about this like logically, and the feasibility study, the the study that Capstone was saying, hey, here's where you really need a captive insurance company. This is where it's feasible. This is what you should do. This wasn't even issued until August 2009, but Reserve Mechanical Corp was already issuing policies and already trying to collect premiums and do everything December 2008. So you can clearly see that this wasn't really set up to be, or it doesn't seem like it was set up to be real insurance, because most businesses, you'd wait until you have a feasibility study in your hands to make a prudent business decision, right? You're not just gonna, do insurance for the sake of, just because, right? You want to see what's the risks, how much is it going to cost? What am I getting covered for? What is the feasibility of doing this? And so this was issued, basically midway through 2009. Just a quote, but there was no discussion of any likelihood of risk in this feasibility study. So not only was this feasibility study done late, it didn't even consider one of the cornerstones of insurance. Again, I don't know a whole lot about insurance, but I do know insurance is about risk management. You're supposed to be hedging and paying premiums to cover your business against unforeseen risks. So if there's no discussion of any likelihood or percentages of risk in the feasibility study, what use does this really have for any business owner, right? Another shortcoming was there's no investigation in Peak's business operation by the risk management consultant. So the company that Capstone outsourced the feasibility study to, or co-wrote the feasibility study with, they didn't actually investigate any of Peak's business operations. So we talked about previously, they manufactured, sold, and repaired underground mining equipment. Well, the company that was issuing the feasibility study and just trying to determine, what kind of risk and what we should insure against, they didn't actually do any investigation. So that's a huge shortcoming. And I just brought these over from part 2, which you can view in the link here or in my video catalog. Part 2 covers these 2 issues, and I'm not going to rehash them here, but the singular carelessness of how they prepared all of the documentation was a big shortcoming, and it was highlighted by the court, and the premium pricing problems. And so the way that the premiums were priced didn't follow any industry standards. They didn't check for any commercial availability, anything like that. More details, if you want to know specifically what this was about, is in part 2. And just another quote that kind of sums up how Peak and Reserve Mechanical Corp interacted or was represented by Capstone is neither of Peak's expert witnesses. So they brought 2 expert witnesses to defend them in this court case, named Solomon or Mead, I think that's the last name, compared taxpayers' premiums to premiums charged by unrelated third-party insurers. Therefore, neither expert witness had a basis to determine whether the taxpayers' premiums were commercially reasonable. Think about that for a second. That means that none of the expert witnesses could prove that they actually even looked for what was commercially on the market. And if you think about any reasonable business, the first thing you're going to do is go to market. You're going to see what's the best price that I can get for the best kind of coverage. So we can see, the taxpayer's relationship with Capstone, I think, really encapsulates what went south with this arrangement and what really not to do when you try to set up a captive insurance setup, or when you try to create a captive insurance organization and insure yourself. So that's my closing thoughts. Basically, I wrote a quick summary, but taxpayers in a rough spot based on this, based on these facts and circumstances. Surely we know how this court's going to rule, but hopefully you're interested in how we analyze and where the court comes from, because I think that's where the most learning is gonna happen, and we're going to dive into that in the next video. So that's it for this episode. If you like this content, please like the video, subscribe to my channel, and comment or email me your thoughts. Thanks. Bye.